Welcome to the Frug Life. Today I found a very old script I wrote for the podcast, and I was sure I had recorded it already. But I scanned through all my episodes and I can't find this episode. And if I have recorded it already, I have so many episodes and no one's going to remember this episode from 4 years ago or however long ago I wrote it. Investing can be scary. It can be scary to think your money might lose value. Stocks are dangerous. If I just keep my money in the bank, it will be safe. I have bills to pay. I can't afford to invest. There's so many reasons, excuses really, not to invest. And for the most part, they're just that, excuses. I made these excuses myself for years. It took me years longer than it should have for me to start investing. And now I love it. As a super frugal person, paychecks for a long time have meant nothing to me. It's just more money in my bank account. But now, as I've started developing more as an investor, I look forward to my paychecks again. I used to worry about my investments losing value, about a big downturn in the US economy. Now, I'm like a little happy when stocks go down. I see it as an opportunity to buy stock at a discount. The world is full of opportunities. Now, almost whatever stage of life you're in now, I think it can be worthwhile to make your first investment. It doesn't have to be big. Even $100 is a starting place. You can see your money start to grow and to work for you for the first time, not the other way around. And really, if you want to retire, you will need to invest. There's no other way around it. Well, I suppose there is, and that would be saving so much money, oodles of money, but it's really not plausible. To retire comfortably, I think you need at least $1 million. Sure, people retire with less than that, but you may be an accident away from financial ruin. Now, to interject, I'm going off script for a second here. I'm not so sure about that $1 million figure I quoted. Your circumstances definitely depend. Having extra money, though, saved in retirement does seem like a good idea. Okay, back to the script. Not to get on a tangent, but the idea of Social Security will probably not exist when I plan to retire. Actually, I think that's definitely not true. It's not going to exist in the form, the way it exists today. But I think Social Security in some form will exist in the future. I guess it's a little interesting to read this previous episode of mine and how my views have developed over time. I'm pretty sure I wrote this in 2019. The point I was making, though, still holds true. You maybe want to be careful about how much Social Security you factor into your retirement plan, depending on when you plan on retiring. Okay, so that $1 million goal I talked about might seem crazy. How can you earn $1 million? And if you're just trying to earn it as an employee, just from your wages, just saving, that would be really hard. Impossible for most. But that is not what we are doing. We are going to put money to work for us. Investments and compounding interest are the magic that are going to make this plan work. As you contribute to a retirement account, you can invest the money in stocks and bonds and make an actual return on your investment. Your money will turn into more money, and it is a beautiful thing. I know it all seems daunting now, but we just need to take that first step, to take a very small leap of faith. And like I was saying in the beginning of the episode, and I'm going off script now, when I was that college student, right, I was afraid of stocks. I thought stocks were risky. I thought that you could put all your money in stock and it could all just disappear one day. And really the odds of that kind of thing happening is really minuscule. Let me caveat that and say that investing in individual stocks, that could happen. Investing in a broad index fund, the chances of everything going to zero are not very high, in my opinion. And if they did happen to go all to zero, I think the world would be in such a state of disarray that your stocks are probably not your primary concern. In the original script, I recommend starting an account with Robinhood or Webull and buying your first stock. I've kind of shifted away from Robinhood. I don't like Robinhood so much now. I will have a link for Webull in the description, though. And you can look around on those apps and try to pick something. you might look at something like VTI, which could be a good first investment, something with a broad exposure, something that will hopefully go up but is a pretty safe bet in the long run. Of course, this isn't financial advice. You can pick any broad ETF, just maybe look at the expense ratio on it first. But something like VU is something you might want to check out too. Jackie, shout out to Jackie, loves VU. You can also listen to one of my past episodes on Robinhood. If I remember, I will link it in the show notes, what I'm talking about. Although, actually, I'm not even sure what I'm talking about. I talked about Robinhood in so many episodes. Anyways, I think the next point I try to make here is that markets as a whole, the stock market has a positive expected return. So there's going to be ups and downs in your investment. The longer time that you're invested, the more likely you're going to be in a positive position. That's just kind of the nature of an upward sloping line. I also recall my first time getting a dividend, and I loved that feeling. I was paid for owning a stock. It was a beautiful thing. You own an asset that appreciates in value, and you are paid to own it. So stocks are a great investment tool. Now, there's some people that are obsessed with dividend stocks. I'm not sure you should be. In fact, there's reasons not to be, mainly because dividends are a less tax efficient way to get money out of your stocks. In some ways, it's better if the company keeps that dividend, keeps that money, and just keeps growing. And then later you can sell your stock and realize a gain, because the payment of that dividend, right, is a taxable event. It's kind of a caveat, or tangent, I guess I should say. Now, there is risk in stocks, I should be clear. You should be well diversified. Don't just hold a single stock. And if you don't have a ton of money to spend on a lot of stocks, or really just anybody, you may want to look into an ETF, an exchange-traded fund. Basically, buying this one ETF is like buying a small amount of many different stocks. In just one transaction, you expose yourself to hundreds or even thousands, depending on the ETF. This broad exposure greatly reduces the risk that any one stock performing badly will have a negative impact on you. Instead, being exposed to many stocks means a badly performing stock is likely going to be offset by a stock that's performing well. And all in all, the US stock market tends to slowly go up in value. So I don't want you to be paralyzed by fear or overanalysis. Just try something new. Maybe like me, you'll love it. But your first stock, I think, is a crucial first step, and you shouldn't be afraid to take it. Even if you don't listen to me and buy some crazy stock in the hopes it'll shoot to the moon, you'll probably learn something from your actions as well. So if you haven't made an account yet, you can try one of those online brokerages I mentioned before, Robinhood, Webull, or Sofi. Use one of my links in the show notes and you'll probably get a free stock. With Webull, you get a free stock just for signing up and another for depositing $100. I'm not sure if that's the active promotion right now. It was at the time. I made the note that these are both FINRA secured and they are legit financial institutions that won't just run away with your money. And I suppose when I was really new to stocks, just putting my money on an online brokerage was scary. I don't even really think about that kind of thing anymore. Anyways, be the master of your financial future. Start today. Take a small step. I'm going to have plenty more of episodes on investing. That certainly was true. And I will be with you every step of the way. Oh, how endearing past me. All right. Well, thank you for listening to this week's episode. It was kind of a blast in the past from me. It's been a little while since I had a script as detailed as this one that says everything that I'm supposed to say. I wonder if I should go back to that. As you probably noticed, I've been using this Ricky Rambles format a little bit more on the Frug Life. I haven't done a listener survey in a long time for the Frug Life. Maybe I'll have to do one again. And actually, I lied. The episode goes on a little further. That was just the break. Previously, I had a break in the mid-episode, or usually near the end of the episode, and this has more. It's basically just saying that I want to help you with your financial goals. You can email me at ricky@thefruglife.com. If you want to reach me, make sure to share the podcast with your friends, coworker, or whoever. Financial freedom is a great goal to have. Let's all reach it together. That's a little hokey. All right. Stay motivated. And oh yeah, at the time I was working on a possible giveaway to people that did a review on Apple Podcasts. I really didn't get enough reviews to like do a drawing. Maybe I'll have to do this again. Leave a review on iTunes or wherever. Probably iTunes because I'm not going to look at all sorts of strange review sites. Maybe I'll do a drawing for a gift card. No promises at this point, though. All right. Anyways, thanks for listening. I hope you enjoyed this month's episode. Have a great week and stay frugal.